All right, what's up, everybody? We're gonna wait a few minutes to jump into this until more people can jump on. I didn't schedule this or anything, so just waiting for this to hit people's YouTube feeds. Let me know if you can hear me. I want to make sure everything's working. And also, I think my camera might be backwards here. Um, no sound. All right, Zachy Z, you said no sound, but everybody else says can that they can hear me loud and clear. So might be might be your device there. All right. Okay. All right. Today we are talking about the yeah, Zachy Z, you had it muted. All right. We're talking about the Powell was just recently testifying before Congress today. And so we're going to talk about that because he is saying that they are strongly committed. The Fed is strongly committed to fighting inflation, and he noted that a recession is a possibility, and I think it's virtually a guarantee that we are right now already in a recession. So we are going to be talking about that today. Um, and then if there are any super chat questions that come in, I will do my best to answer every single one of those. And then I'll be watching out for other questions as well. All right, let's dive in. We're going to be talking about Powell's testifying before Congress today. So the first thing that he said was that they are strongly committed to fighting inflation. Now, this is one of those things that I think everybody is underestimating. If we take a look at the last 2 years, 2.5 years, let's take a look at the track record of the Federal Reserve. Number one, they said we are strongly, they were full force in printing money, QE, making sure that prices didn't collapse of pretty much anything, monetizing all the government debt necessary, buying all the mortgage-backed securities necessary, supporting any spending the federal government needed to do, supporting any borrowing that they needed to do by printing money, making purchases of things that they're legally not allowed to purchase, like corporate bonds through ETFs held at the Treasury. So they basically print money, hand it to the Treasury, then the Treasury makes those purchases because the Fed is not allowed to hold those themselves. So on their balance sheet, they're only allowed to hold treasuries and mortgage-backed securities. And so anything else that they want to buy, like junk bonds or investment grade bonds, those were held at the Treasury. So it's like if you want to go to the liquor store and you're 18 years old, you go with your cousin and you hand him a couple bucks because he's 21. So you send him in, he goes and buys liquor, and then you get you go to your party. Same thing happening here. The Federal Reserve's not allowed to buy these things, and so they just give the money to the Treasury to have the Treasury buy them instead. Um, and so they were fully committed to all that during that entire time frame. So that's the first thing. Then they started to signal, hey, at some point we're going to have to stop this and turn this around, but we're not thinking about it yet. And it was true; they weren't thinking about it yet. Their balance sheet kept on expanding. They kept interest rates low. The next thing was they were saying, "Hey, we're going to turn around soon. We're going to raise interest rates and sell assets off of our balance sheet at some point." So they gave the market a lot of warning, and all along they were signaling something that actually ended up happening or was happening at that time, and nobody believed them, especially going back into January of this year. A lot of people did not believe that they would ever raise rates or that they would raise rates significantly or that they would sell assets off their balance sheet. Yet that is what they are doing right now. So the question is, how committed are they to actually fighting inflation? A lot of people say, hey, yes, these are big interest rate hikes, but it's nowhere near the inflation rate. So these rates aren't neutral or even above neutral. And so there's no way it can fight inflation. The problem with this is that at a certain level, the Federal Reserve does understand that their entire existence relies on the foundation of the dollar maintaining its status as the global reserve currency. Because without that, the United States has pretty much zero power. If everybody decides to stop using dollars, other countries, central banks, institutions, individuals, if everybody wakes up tomorrow and does not want to use dollars anymore, the power of the United States government goes to zero overnight. You can't pay your military. You can't do international trade. We buy most of our stuff that we have here from other countries. That's the trade deficit. And so we don't have enough stuff. We don't produce enough of our own stuff. So we lose pretty much all of our power overnight if everybody stops using the dollar. So the question is, what would stop people from using the dollar? And basically, it is would be a collapse in the value of the currency, a collapse in its purchasing power from what it is right now all the way to zero. Now, so what would cause a collapse in the purchasing power and throughout time? What that is hyperinflation. Now, the Federal Reserve has watched things fairly carefully, and I think in a way that has led them to make incorrect decisions, obviously. However, they do watch things, whether it's their own data or looking at historical data from other countries as well as the United States, and they realize that one of the main things that causes hyperinflation is a wage price spiral. So prices go up, corporations and companies have to adjust their prices for, their costs go up, so they have to adjust their prices of their outputs so that they can continue to afford things, and some of those prices are wages. So people start getting more money, and then they spend that money on maintaining their lifestyle, their cost of living. And so that creates this wage price spiral where things keep on getting more and more expensive because people can continue to afford to pay those higher and higher prices. That's why the Federal Reserve you've seen people come out recently over the last couple of months saying we need unemployment. This is something that media is not really covering, but the Federal Reserve is actively targeting unemployment here. They're bringing job openings down because they understand job openings are the labor market and stable prices. Those are kind of at odds with each other. Those are goals that are at odds with each other. And so the fact that companies are offering higher and higher salaries, wage price spiral, they need to clamp down on that, cause some unemployment, cause people to lose income, and that will make people not be able to afford the things as they go up in price, which will eventually result in demand destruction and the prices of those things falling. So the resolve here by the Federal Reserve, I think everybody is underestimating in terms of how strongly committed they are to fighting inflation, because they understand that at the end of the day, their existence relies only upon the fact that people continue to use the dollar. And if the price of things continues to escalate, continues to get out of control to the upside, that's the same thing as the purchasing power of the dollar collapsing. And to the extent that that happens more than they want it to the extent that that goes to zero, they lose their jobs, their livelihoods. American power evaporates overnight. So in this instance, I believe them when they're saying that we're going to continue to hike interest rates and sell assets off of our balance sheet until we see that we have inflation under control. And like most things, they will overcorrect. Like most things, they will overcompensate for the inflation that they caused by printing all that money in the first place, by trying to offset the deflationary forces. They will overcorrect because the data that they're looking at is backwards. It has a huge lag time. There's a big discrepancy between the time that the things happen and then the data that they get that they use to make their decisions going forward. And so until we see some sort of an indication from the Federal Reserve officially that they feel like they have inflation under control, I expect more pain ahead. So one of the other things that the Federal Reserve, or that Powell said in his in testifying to Congress today, he said that he was talking about the soft landing, and soft landing is basically getting inflation under control without tipping the economy over into a recession. And my belief, my opinion, my expectation is that is so close to zero chance of happening that it's basically zero. There's no way that it's going to happen. Um, the reason for that is because of what I said before. everything they're looking at is so backwards. They still are looking at the jobs market as strong. It's not strong anymore. For months now, companies have been moving from hiring like they can't get enough people to hiring freezes to layoffs. That is the progression. We've seen that start to happen already, especially in tech, major layoffs, especially in some of the companies that, the no revenue, the no profit, high growth potential companies, especially a lot of the crypto companies like Coinbase, Robinhood, BlockFi. We are seeing layoffs start, and that is a sign of what is going to be happening through the rest of the economy. So, all the data that the Federal Reserve is looking at here in terms of the jobs market being strong, it is it's months old data that they're looking at, and they don't have the ability or the desire to look at what's happening in the moment. And so they're going to fight inflation, fight inflation, fight inflation. Their data, by the time it shows that they've gotten a handle on inflation, everything will have already tipped over into a recession. So soft landing not possible, in my opinion. Let's see here. Speaking about recession, a recession by definition is 2 quarters of the GDP number declining, 2 quarters in a row of GDP going down. First quarter of this year, expectations were that GDP would have grown slightly, and it turned out GDP actually contracted, and that was a big surprise to everybody. In between then and now, we've had an additional surprise increase in interest rates, 75 basis points instead of 50. The Federal Reserve has continued to sell assets or let assets bleed off their balance sheet to the tune of $90 billion a month starting this month in June. And so we are seeing more and more of a tightening effect on the economy. We are seeing savings plummet, debt skyrocket. We're seeing all of these signs that for the last couple of months have been happening, and now analysts are expecting that the recession or that the GDP number for second quarter will be flat. So first quarter they expected a slight gain, and it turned out to be a contraction. And now they're expecting second quarter to be flat. There's almost no chance, in my opinion, that ends up happening. I think we are currently in a recession right now, and the question is, how long is it going to last? All right. What is the next piece about this that everybody asks about? Everybody, not Congress, but this is like regular people that actually live normal lives. The next question about this is government defaults, because we know that the government has $31 trillion, $30 trillion worth of debt, and the amount of debt that they have gets more expensive as interest rates get higher. Now, the problem with that statement saying, hey, if the interest rates get too high, the government defaults, is that it takes a long time, right? Because all of the debt the government already has, that interest rate is locked in. So this month, let's say they've got $1 billion that they have to pay back. They're going to borrow an additional $1 billion to pay that off, borrow a little bit extra to pay off that $1 billion plus interest, minus anything that they bring in from taxes. So they bring in income from taxes, bring in income from borrowing. They use that to pay off their old debt and to pay their expenses other than just the debt. And so you have to look at how fast the debt is maturing in order to anticipate how much their total debt service cost is going up while interest rates go up. Because the 30-year at 3% right now, the 2-year at 3% right now, that doesn't impact any of the debt that they've already taken out until they have to pay that debt off and get new debt as a result. And so it's like rolling over your credit card from 1 0 interest rate credit card during that intro period, rolling that balance over to a new credit card. You keep on doing that until there's no more 0 interest rates available. And then you have to roll it over to one that has a 5% introductory rate. And then you roll that whole thing over into a 10% introductory rate. And eventually you've gotten to the point where you keep on having to take on that new debt. You roll that over into a new higher interest rate that just the interest gets too expensive for you to pay off. So at that point, the question is, okay, well, then the government defaults. And the answer is no, they don't. Because at that point, the Federal Reserve will step back in and they'll start lending to the government again. Any debt that the Federal Reserve owns, that the federal government owes to the Federal Reserve is basically interest free because all the profit that the Fed makes gets swept back to the Treasury. So if the Treasury has to pay $100 billion to the Fed in interest, well, then $99 billion of that is coming straight back to the Treasury because after the Fed pays for its expenses, those profits go back to the Treasury. So essentially, any debt that the Federal Reserve owns from the federal government is interest free for the federal government. It's like kind of like owing debt to yourself. You can say you have whatever interest rate you want, pay yourself 10%, 100%, doesn't matter. It's going from one pocket to the other. And so, in the case that it gets to the point where the Federal Reserve, I'm sorry, the federal government can no longer afford its bills, whether that's from tax revenue not being high enough, or it can't borrow from the free market enough to pay off its bills, that's when QE will start back up again. So you'll see the Federal Reserve's balance sheet right now is declining. It will start heading back up because they'll have to start buying that government debt again. But that's not going to do anything to you and me. That's not going to do anything for corporations. That's not going to do anything for jobs. That's not going to do anything for anybody except for making sure that the federal government does not default on its debt. That's the only result of that. Now, you might be asking, okay, well, that means that the Federal Reserve or the federal government then can continue to spend money into the economy without having to first withdraw it out of the economy from taxes or borrowing from private economic actors. And that is true, 100%. At least at this point during the, before elections come, we have a lot of political gridlock right now. That political gridlock has prevented a lot of spending that we thought was going to happen when Biden first got elected. That has resulted in massive surpluses. If you take a look at right now, the last month, massive surplus, biggest income month ever for the United States government. Brought in a lot of money from taxes and can't spend it all because of political gridlock. And so they're making a lot more money in taxes than they're able to spend right now. And to the extent that tax revenue goes down and they can't borrow enough because they can't afford to borrow, and then the Federal Reserve starts making up the difference, that right now, at least, that political gridlock is preventing a lot of that spending money into existence that would otherwise be inflationary. Now, who knows what will happen after elections? Who knows if we'll have more unity, more of a majority in Washington from one party or another? And then that opens up the floodgates to more spending again, whether that's on the left or the right. Because if you look back through history, recent history, the last couple of decades, with objective eyes, you realize that the responsibility is on both parties in terms of blowing up the deficit, spending excess money, increasing the national debt. It's both of them. It is not one. It's basically like every single time a party switches, it's just like, more than the last. So that is the reality of the interest rates going up. It's not going to result in a government default, and the Fed can stop that from happening without stopping any pain from hitting everyday Americans. Um, at that point, when we see some sort of a turnaround, that is going to be my signal to that everything is turning around. Right now, we've got a lot more pain. Right now, we've got a lot more, a lot of forces on the economy right now that are deflationary forces. A lot of money getting sucked out of circulation right now. And so, with all this money getting sucked out of circulation, that pushes prices down. And we see the way that impacts whether you have inflation or deflation, impacts asset prices first, right? Back in 2020, asset prices exploded, and then it slowly made its way to goods and services. And then finally, it makes its way to wages. Same thing with deflation. We've seen asset prices collapse this year from January until now. Stocks, bonds, crypto, prices have been collapsing. And then the next thing that'll happen is price of goods and services because you get demand destruction. People just can't afford everything. Now, I'm not saying there will be deflation in everything because it's all about supply and demand. And there are some things that people buy that have inelastic demand, meaning no matter what the prices are, people continue to buy them unless they literally just can't. And but things like food, clothing, shelter, housing, transportation, a lot of those things are pretty much somewhat inelastic there because people continue to buy them. They'll stop spending money on everything else and spend money on the necessities as long as possible. And so we'll see the demand destruction take place. And on average, you'll probably see the CPI start to drop rapidly. Even if there are certain things that continue to get more expensive, on average, we'll start to see that drop drastically because again, money's getting sucked out of the economy. If if you're playing Monopoly and the banker just decides to take half of everybody's money, well, what's going to happen? Somebody's going to go bankrupt. And if you keep on playing the game after somebody goes bankrupt, you have to restructure things and adjust for prices and negotiate with each other. Prices start to fall because there's not enough money to continue to support the prices at the current level. So as money gets withdrawn out of the economy, prices have to adjust downwards because the stuff didn't change, but the amount of money did. And so the it takes less money to buy all the stuff. The stuff becomes more valuable relative to all the money. That is deflation. And so right now, I do anticipate that we have more pain ahead, more deflationary forces continue to hit the market. And so there will be an opportunity to deploy cash in the future into assets. There will be a bottom at some point. I don't see the bottom yet. Once the Federal Reserve signals that they're going to pivot, I think that is as close to the bottom as you'll probably be able to get. The last thing I want to talk about before we end the stream here is the fact that Kennedy in Congress, Senator John Kennedy, said we've got a hell of a mess right now. Talking to Powell, you're the most powerful man in the United States, maybe in the world. Now that's a crazy statement from a U.S. senator talking to the chair of the Federal Reserve, the person who is in control of monetary policy, saying, you're the most powerful man in the United States, maybe in the world. That is an absolutely crazy statement, but it's probably not too far from the truth here. When you take a look at the power that somebody like the United States president has over things that actually affect everyday American lives. Yes, you've got executive orders, but at the end of the day, a lot of the power for affecting the lives of everyday Americans comes down to Congress. And let's be honest, they move pretty slow. When you look at the positions of power that people have in the United States versus other countries and how much how much those decisions affect the everyday lives of every Americans and people around the world, I think it's a pretty accurate statement that the person in charge of monetary policy has the most influence over everyday lives of everyday Americans. And this goes back to the Rothschild. I think it was Mayor Amschel Rothschild said, "Give me control of a nation's money, and I care not who writes the laws." And the reason for this is because everything that everybody does, half of it is money, right? All day long, you're trading your time or your labor for what? Money. And then you go home and you have that home because you're paying the bank or the landlord money. And then you go to the grocery store and you get food and you pay them money. And then you go enjoy, you have vacation, you go out on a date and you pay money to do those things. And so if you take a look at all the actions that people take in life, from the vast majority of those actions, half of that action is the exchange of money. So to the extent that you can control the money, you have an increasing level of power over people's lives. And right now, the Federal Reserve has blunt force power over money. They basically control the cost and the scarcity of money. When money becomes really scarce, um, really goods become more abundant relative to the money. If there is absolute scarcity and the money supply doesn't change, then that fosters the environment that allows an abundance of wealth to grow on top of it. And then when you start to make money more and more and more abundant, the result is that real wealth becomes more and more and more scarce. And so that's the blunt force instrument. I have to address this. I'm sorry, everybody in the comments. There's like 1,000 bots in here. Let me see if I can block some of them real quick. Yeah, I mean, I think at this point everybody's aware of this, but the bots problem on pretty much every social media and YouTube, it's like they're always trying to get you over to their Telegram and WhatsApp, and that's never the creators. I've never do that. I'm not even on Telegram. And so yeah, literally I block about 100 of these guys a day, and it's just they auto populate, so it's not even possible to stop them. So what was I saying? Blunt force instruments. So they can basically affect the availability, the scarcity, or the cost of money. And that's a blunt force instrument. And this is why I think it's so dangerous when you talk about the amount of control that you have over money. And yes, I'm on Twitter. Um, when you talk about the amount of control you have over money, they don't have a lot of fine tuning control over money. They've got a blunt force, like a sledgehammer control over it, but they don't have these fine tuning knobs. They don't have a scalpel like amount of control over the economy and over money. And this is the danger of a central bank digital currency, because I see the stage getting set right now for the Federal Reserve and the Treasury in conjunction with each other coming out at the end of this deflationary crisis that we're entering into right now, this crash, this recession, saying everything is a huge mess right now and we are not to blame. It is not our fault. It is not the cause of intervening too much. It's not because we printed too much money. It's not because of fiscal policy. It's not because of taxes or the government spending. The problem is because we had blunt force instruments and we couldn't control these things enough. The problem is because we gave everybody checks, but we couldn't control what they did with them. So they caused asset bubbles and they caused inflation and they caused shortages because of hoarding and because of evil people. So they're going to say all of these things is the people's fault for doing the wrong things with the money. And as if the government just only had more control over what people did with the money, that we wouldn't have any of the problems that we have right now. Now, this is outright false because, well, for a number of reasons, but it comes down to economic calculation that, well, we don't have time to get into that right now. I'll make another video about that in the future. But the pricing problem of determining what the value of everything is that problem is how resources flow throughout the economy most efficiently when you have maximal decentralization on decision making of free exchange, because every person is all throughout their day making value statements and actions based on subjective value of, hey, this is the most valuable thing to me, this is the next most valuable thing to me. And to the extent that people cannot do that, you distort the pricing signal, which distorts the information about the scarcity or abundance of resources. And so any decisions that are made from those distorted information signals cause a misallocation of resources, malinvestment, and wealth destruction. Ryan Mata, thank you so much. I will finish my sentence and I'm going to answer that question after that. Can senators freeze the Fed's ability to spend? Senator Kennedy threatened to freeze the Fed ability to print money. Okay, I'll get to that question in a moment, Ryan. So to the extent that they have the control over that, you cause wealth destruction, because you cannot do that in a way that is as efficient or as profitable to as many people as having it 100% decentralized and having freedom of association and exchange and transactions, with those decisions being made subjectively through every individual actor. It's like economic calculation is the biggest, most complex problem there is and there can ever be. The decision about how to allocate resources in the best way possible. That is the most complex problem that humanity can ever face. And so the way that you do that is to decentralize the decision making, have 8 billion supercomputers all working with incentives aligned perfectly for their own individual needs at any given time. And then you have feedback mechanisms in place to where those decisions, when they are correct decisions, they're incentivized and will result in profit. And when they're incorrect decisions, they're de-incentivized and will result in losses. And as you distribute that decision making across the network with 8 billion people all making their own decisions, then you have the optimal outcome. So any move away from that and a step towards a central bank digital currency is the biggest move away from that as possible, because you are aggregating the control of those decisions to a central decision-making point. You say, we're going to control how people spend their money, which, if you remember about money, it's the flip side of every transaction. So controlling the money in that scalpel-like way, that having that fine-tuning control over the flow of money is the fine-tuning control. It's the perfect, exact scalpel-like control over the flow of resources. And so as you condense that information, you lose a lot of the clarity. As you condense that decision making, you lose all of the incentives and you lose a lot of the information. You lose a lot of the feedback mechanisms for profit and loss and incentives. And so then you have a misallocation of resources. You have destruction of wealth, and that is why it's destined for failure. But if we move that direction, we have a huge amount of pain in front of us, because it's essentially like we've got we've got a fire that's burning through the forest right now, and a CBDC is like just saying, let's just burn down the whole thing. There's nothing left after that. That is as bad as it can get. And so I think I talk about this a lot, but that's where we need to draw the line in the sand. And no matter what the incentives are, no matter what amount of money they're promising you monthly, it is game over for anybody who decides to take a CBDC from the government, no matter how painful life is. All right. So, Ryan, I'll get to your question now here. It was, can senators freeze the Fed's ability to spend? Kennedy threatened to freeze the Fed's ability to print money. Yes, the Federal Reserve, despite what people say about it being private, it's private, quasi-public entity, and it exists solely at the discretion of Congress. Federal Reserve Act of 1913 is what started the Fed, and the Fed's mandates come from Congress. And if Congress decides, the Fed is done. It is over. It is ended. That's at the end of the day, that is the truth. It does not exist unless Congress wants it to continue existing. And so if Congress decides tomorrow that they want to change the Federal Reserve's mandates, they can do it. If the Federal Reserve tomorrow wants to say that if Congress tomorrow wants to say that the Fed can no longer purchase assets, grow its balance sheet, buy treasuries, buy mortgage-backed securities, target interest rates, they can do that. It is 100% in control of Congress. Now, the problem with that is that Congress has a long history of just shoving away its power. Congress is supposed to be in control of war. Guess who they gave that power to? The president. Congress is supposed to be in control of writing all laws. All legislative ability in the Constitution says belongs to Congress and nobody else. But guess what Congress does? They allow the Federal Reserve to exist. They allow the SEC to exist. They allow the ATF to exist. They allow the FDA to exist. They allow all of these entities to exist that create regulations and laws that affect the lives of every single American, and they've abdicated their responsibility to create laws. And the problem is not the fact that Congress doesn't have the expertise or the ability to make these laws, and so they need to give it to somebody else. The reason why this power rests with Congress and Congress alone is because if they don't have the expertise or the ability to come up with an educated law about something, the law should not exist. Period. End of story. That's why the Constitution was written that way, and Congress has completely gone 100% the other way and given away all their lawmaking responsibilities to other agencies. All right, we've got one more super chat question from Fiat Hedge. Thank you so much again. The DJT is diverging from the DJI. Not good. What do you think of gas prices, tax cuts in the next 3 months? Political theater, midterms. Yeah, it's definitely some political theater here, because it's like have you ever gotten cut? You put a Band-Aid on it, right? And it would not be very smart to have that Band-Aid be made out of razor blades and acid, right? And so giving rebates is something Biden recently started talking about giving rebates, just paying people for gas, and then removing the taxes from gas. That's literally like there's a cut, there's a problem. It's like putting a Band-Aid on that problem, that cut that's made out of acid and razor blades. It's only going to make things worse, because it's all about supply and demand. This is one of the reasons why hyperinflation takes over a lot of times in countries, because you look at the problems, prices go up, people say, I'm in pain, I can't afford it. Then the politically expedient thing to do is to just give people more money, but then that results in compounding the problem of more money going after that thing, which continues to elevate the demand, or at least keep the demand where it's at, which does nothing to the supply, because your policies have reduced the supply. When you look at all the regulations, when you look at the tax, when you look at all the shutdowns, pipelines, all the things that they've done to make it harder to produce energy, harder to get oil. You look at all of those problems and see one of the results of that is energy prices skyrocketing. And then you see we're just going to give people more money for it. And at the same time, you're demonizing the profits of the only companies that are left surviving for producing that supply. It is just, it's almost like you couldn't make it worse if you tried. And so they're acting like they're trying to make it better, and it is just making things worse. All right, here. Where is all right, Brad, thank you so much for the super chat. How am I preparing for what's to come? All right, so very briefly here. Number one, gold. Looking very, very strong for the last 6 months. It's year to date up like 2% right now. It's like the only asset class that hasn't collapsed this year, basically. So gold, what it does over time is it on average maintains its purchasing power. Whether you have inflation or deflation, you can usually buy about the same amount of stuff with it, all things considered. Asset prices, goods prices, when you consider a long enough time frame, because there is volatility in it. But when 2020 started, gold went up 40%. How much money did they print throughout the course of their money printing? Well, M2 increased by about 40%. Now, gold stabilized from there, but you have to remember that price increase in gold happened way before the inflation happened. So it anticipated the future inflation as a result of the monetary policy. And since then, it has been able to hold its ground against all of the collapse in asset prices, especially like crypto and stocks and bonds. And so it has done its job over the long term in maintaining its purchasing power. The second thing, if you anticipate inflation, cash gets worth less over time. If you anticipate deflation, cash becomes worth more over time. So over the last 6 months, I have not been, as cash has been coming in, I have not been plowing that in as much as I used to. And so my cash position has been actually building larger and larger. And so when the time comes when the Federal Reserve is finally pivoting and they finally say, hey, we are going to lower the reverse repo rate to throw all that cash back out into the market. We're going to stop raising interest rates. We're going to stop letting assets go off of our balance sheet. When they signal some sort of a turnaround, that'll be very close to the bottom. It might be after the bottom, might be before the bottom, but that'll be very close when they signal a turnaround. And so that's when I'm going to start to say, hey, I need to start looking for the best deals possible and start plowing my cash back in much faster than I have been for the last 6 months. The next thing is I really still long-term like Bitcoin. I know a lot of you hate Bitcoin. I don't like any other cryptocurrency. I know a lot of you do like other cryptocurrencies, but I'm still dollar cost averaging into Bitcoin. Still has a massive asymmetric upside to it. And so as long as I'm not using leverage, the most I can lose is what I put in. And you have many, many, many times more to gain on that to the upside in terms of potential, not guaranteed, but potential. So I'm not all in on it, but I buy a little bit every single day. What else am I doing? Buying value stocks. When I'm buying stocks that are at extreme values, like close to book value, tons of cash, no debt, cash flowing, dividends, income stocks. Let's see what else. I think I'm making a video about this. I don't know when it's going to be posted soon. That increasing income is a huge thing right now. Whether you anticipate we get inflation or deflation in the future, taking control of producing more income for yourself, whether it's a side hustle, starting an online business, starting to create content yourself online because you've got a skill and there are people who will pay you to learn that skill from you. There's 8 billion people in the world. There are certainly some people out there that need and want what you have to give. And so I think there's a huge opportunity that most people have not realized yet to increase your income, even just doing stuff on the side. And I think that's very important right now going forward, that a lot of people start to find ways to do that, because you've got wealth creation is very simply increasing income and relative to that decreasing expenses. And to the extent that you can separate your income and expenses from doing both, decreasing expenses and increasing income, you take what's left over and you can invest that, buy businesses, plow that into your own business, put it in vehicles that will protect it. And so that's the three-step process: increase income, decrease expenses, and then use the difference for investing and creating more wealth. And I think that's the as simple as we can distill it. All right, let me go back and find the super chats that I missed. All right, thank you, 8L. Any recommendations for a book discussing central banking from an operational perspective? Fed Up. Is it called Fed Up? Yeah, I think it's called Fed Up by Danielle DiMartino Booth. She used to work at the Fed. She's very critical of the Fed. Great book. I don't agree with her on everything, especially like ideal monetary and fiscal policy. But compared to where we're at, she's many steps in the right direction there. And so I think it's a fantastic book. Her insights, she's incredibly intelligent, incredibly skilled at what she does, and her book gives you a lot of insight into how the Federal Reserve works. It's one of the reasons why I have such a low opinion of what they do over there at the Fed and how they do it. 8L, thank you again. Oh yeah, you were just contemporary central banking. Looks like you were, yeah, correcting that. All right. I think this is the last one here from Trenton Paul for good taste in speakers. I don't think that's a question. Unless I'm misunderstanding that. So thank you for the super chat there. All right, everybody. I think we've taken enough of your time here for today. And I really appreciate you guys being on here. Really appreciate you guys asking the questions that you did. And if I have anything else, I'll jump on a live stream anytime something happens like this. I will post this as well for anybody who was on in the beginning or just on the end. I'll post this as a video so you can go back and watch it. And really appreciate you guys as always. Thanks for being here.